Hey, what's up, my friend? So, in today's episode, you'll learn, right, how to trade trends like a pro. So, here's the thing, right? Whenever traders, right, they see a trend, oh, the market is in an uptrend, let's buy. But here's the thing, right? Just because the market is in an uptrend doesn't mean that you want to buy immediately. Why is that? And the reason is because not all trends are created equal. In fact, right, trends can generally be broken down into three categories. Let me explain. The first type of trend is what I call a strong trend. So this is the type of trend where the market is usually very strong, right? The pullback is very shallow, and the market just keeps going higher, right? Day after day. And by the way, right, all I'm referring here is to the uptrend. Downtrend is just the opposite. Okay, so strong trend, right? Market just goes up day after day with little to no pullbacks, and usually in a strong trend, the market will not exceed below the 20 period moving average. So you can imagine that, hey, trend is strong, pullback is shallow, and if you want to buy in an uptrend, in a strong uptrend, right, waiting for a pullback can be difficult because the pullback is just so shallow, right? You may not even come to the level that you're looking for. So this is why in a strong uptrend, you usually want to go with a breakout trade. You want to be buying breakout. For example, if the price breaks above the swing high, you can look to get on board the breakout. And since the trend is strong, right, you can usually set your stop loss just below the 20 period moving average. I mean, not exactly below it, but a distance below the 20 period moving average, since that's the area where the market tends to find support. Okay, and in a strong uptrend, the way that I usually trade it is that I try to ride the move. Reason being is that the trend is strong, right? The pullback is relatively shallow, and it's quite easy to hold the trade because the market is moving in your favor strongly. So I tend to hold my trades longer in a strong uptrend. Moving on, the second type of trend is what I call the healthy trend. In a healthy trend, it's a trend where you can see the ebb and flow of the market is quite obvious, right? And the pullback usually would not exceed the 50 period moving average in a healthy trend. So since a healthy trend, it's I would say in a way weaker than a strong trend, right? You can time your entry on a pullback. It's possible to time your entry on a pullback possibly towards a 50 period moving average, or based on my experience, right, usually towards the previous resistance turn support, right? That is where it coincides with the 50 period moving average as well. So this is how you can time your entry in a healthy trend. What about breakouts? Can you buy breakouts in a healthy trend? Yes, you may, but you want to bear in mind that if the retracement comes, right, it's going to be deeper than a strong trend. So this means, right, that your stop loss should be wider, right? You need to have a wider stop loss if you want to be trading breakouts, because if you buy the breakout and your stop loss is say just below it, right, if it pulls back, right, it pulls back towards a 50 MA, you can see that you're going to get stopped out. So if you want to trade breakouts in a healthy trend, ideally your stops should go below the previous swing low in an uptrend and above the previous swing high for a downtrend, okay? And for trade management, in a healthy trend, you have two options, right? The first option is you can look to capture a swing, because you can imagine that if the price pulls back towards the 50 period moving average, there is a distance, right, from the MA towards the previous swing high. So there is a so-called a swing that you can capture, right, up one move higher. So that's one way you can look to exit or to trade the healthy trend. Alternatively, if you want to ride a trend in a healthy trend, you can, right? For example, using the 50 period moving average. But again, bear in mind, right, when the pullback comes, right, it's pretty deep, so you got to, so-called swallow, right, the potential pullback if it comes. And this brings me to the third type of trend, the weak trend. The weak trend, right, is, as its name says, right, it's a weak trend where, the pullbacks are deep, right, it usually retrace, right, towards a 100 period moving average, right, or even lower than that, okay? Weak trend usually tends to retest, right, previous area of support. So when you notice a trend is weak, right, when you see that the pullback, the retracement is very deep, right, you don't want to be trading breakouts. Because you can imagine, right, if you trade breakout, right, there's a good chance that even if it's a uptrend, if the pullback comes, right, it's unlikely that your stops, right, is able to withstand it. So in a weak trend, you want to be buying the pullback instead, buying to pullback towards 100 MA, buying pullback towards the area of support. And also in a weak trend, usually I don't try to ride a trend in a weak trend. Reason being, again, pullback is deep. It's very strong. The pullback, the pullback, is very deep, right? It's difficult to hold those type of trades in a weak trend. So usually I very much prefer to just capture one swing, right? Consider taking profits at the previous swing high, or the first market structure, right, that it comes into contact with. Okay, so this is the three different type of trends that you want to be aware of. And with that said, I have come towards the end of today's episode. If you've enjoyed it, hit the subscribe button and the thumbs up button, and I will talk to you soon.